Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 20th of December here in 2022. As we get ready to go to the new year, we aren't there yet. We have a couple more weeks to go, but it will be light holiday trading weeks. Let's get this one going. Here is a range day. It's a day where the Russell was the leader in today's session, up about 0.70. The Dow, almost 0.5% up. The Nasdaq was flat, and I think we know one major reason that was the case. S&P was just about right there with the Nasdaq, but the main reason, if we can point to one, there's a lot of reasons, but would be the 8% decline in Tesla. But before we get there, we have Nike on the screen. Nike is on the screen just as the video begins because it just released its earnings. And the Nike earnings were 6.54 estimate with an actual 0.85. And of course, the conference call, any other information will be there in the news tab if you want to go a little deeper with the fundamentals and the earnings. That'll take place right here. Of course, the news, just walking you through where these are available for you here in Thinkorswim. So on Nike, right here is the earnings. You can jump into there, but this being about a 10-minute video, we don't have time for that. Just know that the chart and the market reaction on the beat is good. So what was the expected move? Nike shares had, roughly speaking, a 100% implied volatility, taking it to an $8 expected move. Now, in the grand scheme of things, it is a downtrending stock, and it is part of the retail sector, retail being XLY. So we'll jump into that quickly and see that it's going to push the retail sector up a little bit. But the retail sector, XLY, why? Tesla is a main reason. Amazon's there too, so I don't just want to pick on Tesla. But again, one step at a time. The XLY is making new 52-week lows. Back to Nike. It is seeing growth. It's seeing at least better than expected earnings. And that's pushed that stock, again, the $8 expected move. The way we would calculate that, again, take that. Right here is the near-term expiration, $8.09 at the close. Push that up about $8.09. Takes it right up into roughly 11 and 11 to the upside. Now, if this would have been the downside, I know we're looking at the upbeat, but this is how you frame out verticals and frame out butterflies and different ways to play that. So 8 to the downside is 95. That would have taken it to new. Not new 52 lows. It's had a good bounce, but back to the mid move of this recent rally. But what we're going to get, assuming that we do have the sustained bid in the market after the hours, you'll know this after the video before the market opens on Wednesday, is the push into 111, and at the moment, a little bit above it. That will be a key focal point for traders in Wednesday's session. So Nike is on the bid after its earnings. The other stock that had earnings was FedEx. So on FedEx, it had a $12 expected move. And let's see how that plays out after hours. 12 up, 12 down. But $12 up takes it roughly to about 176. And then down $12. These are key levels for tomorrow. About 152.50. So at the moment, neither of those are hit. FedEx shares trade around 170 on its earnings. What happened with FedEx? The earnings were estimated at $2.77. They came in $3.18. Same logic on the Analyze tab for FedEx and how its earnings are playing out. And we'll keep these levels in mind for tomorrow. The other stock we are really interested in, there's two of them. And let's do it the fair way. Let's scan for stocks making new 52-week lows. So using our scan tool, to me, this is in the Thinkorswim platform. Load the scan query. To me, it's going to be on the public list, new yearly lows. And I'll scan in the S&P 500. And in the S&P 500, it shows how many stocks are making, again, new 52-week lows. The idea here is that stocks that show up on this list, especially those in a continued downtrend on the daily chart, maybe throw in a fundamental reason as well. And they tend to get weaker, and that sets up bear flag or bearish trades, put spreads, anything to do with the downside sell short type of opportunities on pullbacks. Let's take a look at how that's working out. Back to the big picture, let's start with the big one. And the other thing to note quickly is that I like to sort these lists, not randomly, but by market cap. So I will actually add in a column over here, customize, and I want to see the market cap, because that way I can rank the top few and not bother with names such as Hasbro, which has a roughly $7 billion market cap, as opposed to the almost, not long ago, $1 trillion market cap. It's gone. It was there. It's gone. $1 trillion market cap is underwater for Amazon, as is the share price. So Amazon shares just made a new 52-week low. And again, that logic will pull the weekly chart back up. Is that which is weak gets weaker, that which makes 52-week lows tend to continue making 52-week lows. What's the trade setup? To me, it's called a bear flag. Or when the market rallies up to a resistance point, to me, it's going to be the moving averages. That's a 20 exponential. That sets up a short sell trade with the risk controlled to the downside, because we're playing a put vertical, or put by itself, or a put vertical, which is executed in the money there, or slightly out for an out of the money put spread. Nonetheless, the two most recent trades, 3 of them, have been up against the 100 per share, 96 per share, and just recently 93 per share. Amazon, which is a leading stock, the biggest market cap name in the XLY, we can always peek at that and see on the Analyze tab. We'll go over here to the economic data. Actually, we'll go back to the fundamentals. No fundamentals for XLY, but what I want to focus on is the top weighted stocks. 23% of the XLY is Amazon. 12% of the XLY discretionary stock is car manufacturing company Tesla. So given that the 2 stocks in the S&P 500 making our scan of new 52-week lows, as Don would say, that's got to hurt. And that does hurt the XLY. That has got to hurt. So looking at Amazon, that's what's pulling down XLY, but it's got a friend, and the friend is retail stock. We may think of it as technology, but the market categorizes it as a retail stock, Tesla. Tesla has made another 52-week low, and that 8% decline, these are the stocks ranked by how much of their loss or gain, GE, Adobe, Accenture, Facebook, but on the other side is Tesla, UPS, FedEx, Wells Fargo. But Tesla does stand out as the biggest loser or the biggest decliner in today's session, which has directly affected the Nasdaq, not the Russell, not the Dow. And you can visualize this from our Market Watch tab. This is our S&P 500. I like to see it as a heat map, but that is the S&P 500 stocks. Tesla is the standout decliner. In the S&P 100, it is part of the consumer discretionary, and other stocks, there's Nike, and others part of its Amazon. And of course, technology is over here, Microsoft, Apple, Google, Meta. And I get that it's confusing because we would think of them as credit card companies, but they actually fall under the market as technology, information technology. That's Visa and MasterCard. But we get NVIDIA and Broadcom, Intel, Cisco, Qualcomm, and Texas Instruments. But the standout is Tesla. In the Nasdaq, that is a bigger hit to its market cap and how the points total in the Nasdaq. So what is weak gets weaker. What is strong gets stronger. And on the other side are stocks such as Cigna, which just came off of its continued push to 52-week highs. Are there any stocks making new 52-week highs? One of them, small market cap, relatively speaking, it's Arch Capital Group, ACGL. Not sure if it's going to be worth looking at ACGL, but nonetheless, it is a strong stock getting stronger. I think the focal point would be on weak stocks getting weaker as we continue this relatively weak volume. Maybe could be a high volatility week, but we'll expect it to be a little more on the calm side. So maybe focusing on stocks at new 52-week lows would be a better play. Those would include LHX, Equity Residential, Warner Brothers Discovery, WBD, Extra Space Storage, EXR, and the list goes down. Essex Property Group, Expedia Travel, NetApp, and the others. A quick look toward the end of the video, just clicking down some of these. There is LHX, and there's Equity Residential, new 52-week lows. Again, the trades are short selling pullbacks, not 52-week lows. So be patient on those. Warner Brothers Discovery, which is another stock making new lows, again, under distribution, persistent distribution, and the short sell bear opportunities are on pullbacks, not at new lows. Be patient with that one. Extra Space Storage, and we'll look at Essex Property Group, ESS, Expedia Travel, and NetApp Appliance, falling under the same category of weak stocks getting weaker, new 52-week lows, and the expectation is they will continue getting weaker through year's end and as we begin the new year. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for December 20th, 2022.